Hello students, how are you all? Are you fine? In the previous class, we have discussed about the computation of tax liability under old tax regime and new tax regime. Under old tax regime and new tax regime is such types of regime where the assessee is calculated its value of the tax and paid to government. In previous class, we have also discussed about the slab rates, about the income on long-term capital gain, tax on casual income, as well as tax on the short-term capital gain under section 311A. So dear friends, dear students, it is my humble submission before all of you. In the case of advance payment of the tax, in the case of pay as you earn, in the case of the provisions according to the Income Tax Act 1961 regarding advance payment of the tax are going to discuss by me in today's class. So dear friends, dear listeners, I Dr. Lal Babu Jaiswal, Assistant Professor, Faculty of Commerce, Banaras University, Varanasi, Uttar Pradesh, India. Dear students, what is advance payment of the tax? In the case of advance payment of the tax, a famous scholar, a famous educationist, Benjamin Franklin, once said, in this world, nothing is certain. In this world, nothing is certain but death and tax. But death and tax. So, why is that? When is that? What is that? Who is that and how? Okay, here answer is to this advance tax. Dear students, the famous educationist, famous scholar Benjamin Franklin said this types of statement. Nothing is certain, but death and taxes are certain. Or while we talking about the taxes, the advance payment of the taxes are certain. Advance payment of the tax is also called pay as you earn. जैसे कमाओ वैसे चुकाओ. एडवांस पेमेंट ऑफ द टैक्स इज आल्सो कॉल्ड जैसे कमाओ वैसे चुकाओ. In the case of advance payment of the tax, this slide represent what are the provisions regarding this are included. First, liability to pay advance tax, section 207 to 208. Computation of advance tax, section 209. Installments of advance tax and due dates, section 211. Credit for advance tax, section 219. Interest on non-payment, short payment or deferment of advance tax, section 234B and 234C. So dear friends, dear students, these types of sections, these types of provisions under the sections which are given in these slides are related to the chapter pay as you earn, chapter advance payment of the tax. So first I am going to discuss liability to pay advance tax, section 207, section 208. First I am going to discuss section 207 and section 208. Dear students, according to section 207, what is advance tax in income tax? Dear students, advance tax is the amount of income tax payable well in advance instead of being paid in lump sum at the end of the financial year. As per the deadline set by the Income Tax Department, input tax, also known as a income tax, is intended to be paid in the same year that the income was earned. This types of tax is called pay as you earn. This types of tax is called advance payment of the tax. So dear friends, dear students, this is a terminology of the advance payment of the tax. Dear students, this slide represents as per section 207. Section 207, taxable person who are freelancer such as employees, freelancer doctors, lawyers, accountant, architects, etc. earn more than rupees 10,000, earn more than rupees 10,000, earn more than rupees 10,000 and are subject to taxation. For employees, employer deduct tax at source on salary income. Therefore, advance tax should only be paid if, in addition to salary, we also can earn other income that is not reported to our employee. This could be capital gain, this could be home ownership income, this could be dividend income, and this could be interest income. And these incomes are not reported by the employee to his employer. So in this case, the term of advance payment of the tax is needed. Even non-resident Indians have income in India and have more than rupees 10,000 in tax due is liable to pay the volume of tax in advance. Dear students, in other words, we can say the advance tax is a tax which is related to a person, and a person shall liable to pay advance tax only if the tax liability exceeds rupees 10,000. That is, a person shall be exempt from payment of advance tax if tax liability does not exceed. If the tax liability does not exceed rupees 10,000, health and education cess shall also be considered for the purpose of calculating the tax liability. It means a person who is not liable to pay the volume of tax in advance, whose liability does not exceed rupees 10,000. So we can say both individual as well as corporate, taxpayer need to pay this tax. This applies to individual, particularly when they have income other than the income from salary. If the sole income of an individual is his salary, if the sole income of any individual person is only from the salary head, then we need not to pay the advance tax as employer deduct it at source, known as a tax deduction at sources, tax deducted at sources. But when there is a revenue from other sources such as interest earned on saving bank, capital gains, lottery wins, or any rent from house property or business, then we need to pay advance tax on all income after adjusting expenses or losses. So dear friends, I hope you are getting such types of provisions which are necessary to when advance tax is needed to pay, when the taxes are needed to pay in advance, or when the taxes are not needed to pay in advance. So dear friends, it is my humble submission before all of you. Please pay attention. So in next slide, who does not have to pay advance tax? There are some types of criteria or terminology in which advance tax is not applicable. Advance tax is not applied when a taxpayer, first, when a taxpayer opts the scheme of computing business income under the section 44 AD or under section 44 ADA, that is presumptive taxation scheme for business or profession. So dear students, in the case of presumptive taxation scheme, there is not need to be pay the volume of advance tax. That there is not need to pay the volume of tax in advance. So dear students, second one is a senior citizen whose age is 60 years or more in previous year during any time, and who does not have any income from business or profession. If the senior citizen have not income from business and profession, so such types of assessee, such types of senior citizen assessee is not liable to pay the volume of tax in advance. So dear friends, it is my humble submission regarding section 44 AD, 44 ADA, and the person who is the senior citizen and not having the income from PGBP, profit gains from business and profession. Dear students, this slide represents how advance tax is calculated. How advance tax is calculated and what are the way where the advance tax is calculated. First, determine the income. First of all, we should calculate, we should compute, we should determine the volume of the income, and out of income we should minus the expenses, and minus the expenses means minus all expenses from income, such as a health insurance premium, phone bills, and other telephone, other transportation cost and other costs are minus to find out the income from any sources. Third one is compute the net total income. Net total income means after the computation of income from salary or other, it is also included the income from interest, income from letting out house property, lottery income, etc., or interest from fixed deposit will be also included to find out the net income. Dear students, after computing the net income, advance tax is calculated or computed. Advance tax is computed if the calculated tax amount is greater than rupees 10,000, then we are liable to pay the volume of tax in advance. Dear students, this slide represent regarding to section 211 of Income Tax Act 1961. This slide represent section 211 of Income Tax Act 1961 represent what are the dates when the tax volume is paid in advance. So dear friends, there are 4 types of installments under the 4 different dates, and these dates are applied in the case of individual assessee as well as corporate or company assessee. It is the first, on or before 15 June, on or before 15 June, 15% of total tax. 15% of total tax. On or before 15 September, the 45% of total tax. 45% means बच्चों 45% minus 15% is equal to 30% should be paid. How 30% is computed? So 45% minus 15%. Dear students, 45% minus 15% is equal to 30%. In second installment, it is required to pay the 30% of total volume of tax in advance. Third one is on or before 15 December, they need to pay the 75% of advance tax. 75% means 75% minus 45% is equal to 30% is needed to be paid in advance. And in last installment, which is due on or before 15 March, 100% of total tax liability, 100% means 100% minus 75% is equal to 25% is needed to be paid in advance. So dear friends, dear students, dear learners, first installment is 15% of total tax, second installment is 30% of total tax, third installment is also 30% of total tax, fourth installment is for 25% of total tax. So then we can say 10%, 30%, again 30% and 25% is the rate of the advance payment of the tax under the 4 types of different heads, that is on or before 15 June, on or before 15 September, on or before 15 December, on or before 15 March. So dear students, these percentage and dates are given under the section 211 of Income Tax Act 1961. Dear students, this slide represents the important point regarding the advance payment of the tax or payment of advance tax. First, taxpayers who have opted for presumptive taxation scheme under section 44 AD, under section 44 AD or 44 ADA have not paid the whole of their advance tax liability in one installment on or before 15 March. It means the person, the assessee who has been opt the presumptive taxation scheme, there is no need to pay the volume of tax in advance, and it should be needed to pay on or before 15 March at the rate of 100%. Next one is when the last day for payment of advance tax happens to be a bank holiday, it can be paid in next day without any interest charge. It is very important point. Suppose 15 June or 15 September or 15 December or 15 March any bank holiday is laid down, the advance payment of the tax date will be considered next day of the last payment day. So dear friends, third one is pay advance tax either electronically or physically using challan number ITNS 280 by visiting www.tin-nsdl.com or following the link given on the income tax website. Dear student, note, taxpayers PAN number, permanent account number, is mandatory in the challan, and creating way of the wrong PAN may attract a penalty of rupees 10,000. So assessee should note down the challan number, which is the PAN number which is required to put in the challan number 280 should be in correct order. Dear students, next one is after the tax is paid, it will get reflected on taxpayers form 26AS within 3 or 4 working days of making the payment. Dear student, and the assessee should check form 200 the check the form 26AS for confirmation of detail, and such types of checking process will be attempted by me in further class. How the ITR is submitted under ITR 1, ITR 2, ITR 3, ITR 4 and so many. So dear students, it should be noted the important point. This slide represents, dear students, when any person, any assessee who is liable to pay the amount of tax in advance and does not pay the amount of tax in advance, it is called missing the due dates for paying the advance tax. Missing the due dates for paying the advance tax. These types of components is called failure to pay the amount of tax, failure to pay advance tax within the due date will result in penalties. Unpaid advance taxes under section 234B are subject to a simple interest penalty at the rate of 1% per month for part of the month. If the taxpayer does not pay the full amount, entire amount will be charged on the shortfall, and in case of shortfall, we will be charged 3 months of interest under section 234C. Dear students, section 234C, 234B. In the case of section 234B, if the amount of tax deduction at sources is less than 90% of overall tax, 90% of overall tax obligation, then interest is calculated 1% per month. 1% per month. Suppose the assessee is required to pay the volume of tax on 15 June rupees 10,000. 15 rupees 10,000, but he paid rupees 6,000, the balance amount 4,000. Balance amount 4,000, and it have been paid. It would have been paid in second installment. Second installment is 15 September. तो from 15 June to 15 September there are 3 months. 3 months. तो dear student, 4,000 पर 1%, 1/100 इंटू 3 मंथ का है, 3 मंथ से मल्टी कर देंगे. तो डियर स्टूडेंट 120 रुपीज इज कैलकुलेटेड एज अमाउंट ऑफ इंटरेस्ट. तो 4,000 will be paid plus interest 120, it will be 4,120. So dear students, it is my humble submission before all of you how the interest is calculated. Dear students, in the next slide, this slide also refers when any assessee does not pay the volume of tax in advance. So under section 273, if the advance tax payable by the assessee is untrue and the assessing officer has reason to believe or has failed to furnish a statement of the advance tax payable by assessee, then the assessing officer may direct such a person to pay by way of penalty which shall be less than 10% but shall not exceed 1.5 times of the amount by which tax actually paid. Dear students, 1.5 times, it is not excess to 1.5 times or not less than 10%. The such types of amount which is called the penalty, and penalty is imposed by the assessing officer on such types of situation when the advance payment is calculated or computed by the assessee in wrong manner, in wrong way. So dear students, during the financial year immediately preceding the assessment year fall short of 75% of assessed tax or the amount which would have been payable, would have been payable by way of advance tax if the assessee had furnished a correct or completed statement whichever is less. So dear friends, dear students, it is my humble submission before all of you. These are the provisions regarding to the missing the due dates for paying the advance tax. So what are the provisions regarding this? I am explaining this. Dear students, in the case of when the advance tax is not paid on the due date, so what are the way to calculate the amount of interest and how the month is calculated? It is given under this slide. Section 234C is refer for deferment of advance tax by the corporate and non-corporate assessee. Specified date is 15 June. On 15 June, 15% of total tax, 15% of total tax due on return income minus advance payment, advance tax paid to 15 June, and the month will be 3 months. In the case of 15 September, 45% of advance tax, and month will be also 3 months. And in case of 15 December, the percentage is also 75% and month will be 3 months. On 15 March, the rate of advance tax 100% and the month will be 1 month. So dear students, these are the months and these are the percentage where the interest is computed under section 234C regarding to the advance payment of the tax. Regarding to the advance payment of the tax. So dear friends, this slide also represent the such types of component where the on advance payment of the tax failure situation, there is no need to pay the any amount of interest. However, if the advance tax paid by the assessee on the current income on or before 15 June or 15 September, not less than 12% or 36% of the tax due on returned income respectively, then the assessee shall not be liable to pay the amount of interest on the amount of shortfall on those days. In the case of first installment, if the amount of paid advance tax not less than 12%, in second installment the amount of advance payment of tax not less than 36%, so there is no need to pay the payment of advance tax. There is no need to pay the amount of interest on shortfall of the advance payment of the tax. Dear students, Government of India or government gives the amount of tax at the last date of the financial year, but what are the reasons behind this to take the volume of the tax in advance? These are the reasons where these are the benefits where the tax is collected by the government in advance. Dear students, advance tax helps reduce stress for taxpayer. Advance payment of the tax, thanks to tax in advance, taxpayer do not have worry about running out the money or paying taxes at last minute. Advance payment of the tax helps to speed up the tax collection process. Advance payment of the tax help to government funding increase as the government can interest on amount collected. Government can earn interest on collected amount of tax. Advance payment of the tax also helps those who pay taxes in advance can avoid non-payment. And advance payment of the tax helps business manage their finance well and provides an overview of income earned throughout the year. So dear students, with the help of these discussions regarding to the advance payment of the tax, regarding to the pay as you earn, I hope you got each and every point. You all got each and every point regarding to section 206, 207, 208, 209, 210, 211, 234 B, C regarding to the interest on the non-payment of the advance tax. So, dear students, I will discuss the numerical case with the help of the advance payment of the tax provision in further class and next class. So today I thanks to each and everyone for giving the attention, for giving the support. Thanks again to all of you. See you next. See you soon.